Hello, everyone. I'm Jamie Holmes. Christmas is just around the corner, and as every consumer and investor knows, the holiday season means even more demand for precious metals. People all around the world are clamoring for silver and gold, like Yukon Cornelius and the Rudolph the Red-Nosed Reindeer cartoon.
Gold and silver, silver and gold. Wahoo!
So what better time to revisit one of our favorite episodes of Money and Markets, focusing on the historic bull market in precious metals. We hope it will give you some perspective on how far the market has come in just 2 months and a good idea of where it's going. Enjoy the show, and from all of us here at Weiss Research, have a Merry Christmas and a very Happy New Year.
From our studios in Jupiter, Florida, Weiss Money Network presents Money and Markets. And now, Jamie Holmes.
Hello, everyone. Our first guest this week hopped on board the precious metals rally early on, and it has been paying off for his subscribers ever since. Sean Broderick is a natural resource and small cap specialist for Weiss Research and, of course, the editor of the Crisis Profit Hunter newsletter. It's so good to see you, Sean.
Thanks for having me back, Jamie.
All right, let us start with gold. Everyone's talking about gold these days. It's shattered its previous records. Now many experts, though, they're calling for a correction. Do you agree that gold is actually going to see a pullback in the short term?
Well, gold could see a pullback, but we don't know when. It's in a breakout. That's the thing. You know, I keep hearing these guys saying gold is overbought, gold is overbought. That's when breakouts happen, is when things are overbought, and we don't know how high it's going to run. You have to wait for that trend to break. Then you can maybe do something on the downside. In the meantime, I'm just going to let the thing run. I mean, we have positions, they're going up. Now, yes, I expect gold to pull back at some point or another simply because nothing goes up in a straight line. But don't try and pick the top. That is just something that will really come back to bite you.
Okay, let's talk long term. Nothing lasts forever. How high do you think gold could go over the next 2 years and even beyond?
Well, my target this year is around $1,450 for the end of the year. But looking, say, 2 years down the road, I think $2,500 is a good price target. That's what I'm using in my new silver and gold report, as a matter of fact.
Okay, let's talk silver. Biggest high it's seen in 30 years. What's your target for that metal?
My target for silver is over $31. And when I'm actually made that announcement in Toronto, you know, a lot of people disagreed with me, which is good, actually. I want people to be bearish. Just like in gold, you know, there's a lot of people who have turned bearish recently. And the reason is you can't have a bull market without bears. You need somebody to be on the other side of your trades. And so the more bearish people there are, then the more things can go up. It's one of those paradoxes of the market that many people don't grasp. When everybody turns bullish, when some of the biggest bears I know turn bullish, that's when I'll really start to worry, and that's when I might sell.
Okay, another big one, palladium. I mean, I don't think a lot of people even know what palladium was because it doesn't get the play that gold and silver have been getting lately in the press. It's been one of the best performers that we've seen lately among precious metals. What's your take there?
Well, here's the thing. So few people understand how rare palladium is. I mean, it's used for two things. It's used to keep the emissions in your car running right, and it's also used for cheap wedding bands. So, you know, it doesn't get a lot of attention, but there are 11 times more ounces of gold pulled out of the ground every year than there are palladium. Palladium is a rare metal, and now there are investment funds that buy physical palladium, and that is changing the face of the market because there are people who do know how rare it is, and so they're adding palladium to their portfolios because they figure, you know what, this could really boom. And as that happens, as more and more people buy, it actually becomes kind of a self-fulfilling thing. And I think we could really see palladium head much higher than it is now, and that's one of my bets for, you know, the precious metal that will really outperform.
Okay, for investors looking to get into precious metals, first of all, why now should they do it? And then how should they do it?
Well, here's the thing. I believe that precious metals will be heading much higher. And if you aren't worried about short-term zigs and zags, and there are short-term zigs and zags in everything, that's the thing that, you know, shakes some people out of the market. But as long as you're not worried about that, what I think you should do is take the amount of money that you want to invest in precious metals over the next year, divide it into 12, and then invest, you know, every month into precious metals. And if you get the pullback, then that's great because you get to buy more because it's at a cheaper price. But over the longer term, if you're riding that big trend, and I sure am, it's going to head much higher. And so you'll be much better off that way.
Okay, let's talk mining companies, because that's a good investment opportunity that you've written about in the past. Give me some particular names, some particular picks here that you see.
Well, here's the thing. individual names can blow up in your face, and I certainly do pick them for my publications and stuff, but one thing people might want to look at is the GDX. That's a basket of the best gold miners. And the thing about the GDX is you have exposure to these great stocks, but it can't really blow up in your face because it's a whole bunch of like different stocks. So if people were going to look at it on the long side, that's what I might do. One that I took profits on recently is Eldorado Gold. And the reason I did is because it wasn't enjoying that last move in gold. It just kind of went flat to down. Now, I don't know if there's anything wrong with it, nothing I could find, but still, you don't like to see that. That's kind of a warning sign that maybe you should get out. We had big fat gains, why not take them? And so that's how that worked.
All right, Sean Broderick, always a pleasure to have you on set.
Thanks for having me on.
And Sean's going to be back a little later on, and we're going to discuss some of your forecasts with other experts. Thanks, Sean.
Great.
One of the big factors contributing to the rally in precious metals is increased demand from Asia. And joining us to discuss that trend is Weiss Research Asia Specialist and editor of the Asia Stock Alert, Tony Sagami. Tony, thanks for coming all the way down to Florida to see us.
Happy to be here. Thank you.
All right, first of all, why are we seeing so much more demand from Asia, and in particular China, than ever before?
The real reason is because the incomes in China are rising so rapidly. You know, that China economic boom is raising the standard of living for lots of people. And as their income rises, one of the very first things they do is they put their money into gold and other precious metals. Gold is very important in the Asian cultures. And so that's the first place they look.
Okay, how does gold, it functions differently in some ways on a societal level, right?
Yeah, you got to remember, this is a communist country, and it wasn't that long ago that banks confiscated their money, so there's a very mistrust of financial institutions in China. So they prefer hard assets, including gold, and so that's what they trust. That's their primary storehouse of wealth. On top of that, gold has a very different gift structure there. You know, here we might get an iPod or a video game, but on birthdays, marriages, graduations, births, it's very common to get gold as a gift. And so they have that, and that's the mentality. And that's true all over Asia, but especially in China.
Okay. Do you have any specific recommendations on how investors can take advantage of this trend?
Well, you know, Sean is probably the expert on gold. You should take a look at the picks he has. But any gold investment, whether it's the bullion, gold mining stocks, are all very good. But I'd also expand your definition of precious to include anything that's rare and valuable. And that includes things like uranium also.
Well, speaking of uranium, one of our viewers, Pino Silveri, he wrote in to ask about rare earths. Now, technically, they're not precious metals, but do you have an opinion on them?
You know, the name is actually pretty descriptive. They're rare and valuable. And so Pino's asking a very good question. I think this is one of the best places for investors to look. Rare earth metals are primarily used in electronics, everything from your cellular phones to your microwave ovens to Scud missiles. And so rare earth metals are critically important to those. And China has about 95% of the supply in the entire world. And so they really have almost a monopoly on that. And I suspect prices of rare earth metals, which are up over 300% already this year, are going to go higher and higher and higher. And the very best stock to take advantage of that is a company called China Rare Earth Metals.
Okay, I know one of the investments that you've also recommended in the past, it's been getting a really big boost lately because of this rally in precious metals, and that's the Merck Hard Currency Fund, right?
Yeah, and that's a very conservative mutual fund. What it does, it takes about 90% of its money and invests in short-term government debt, kind of like a money market fund, but in non-dollar denominated assets. And then they take the last 10% and they invest it in bullion itself. And so for a very conservative, almost a parking place for your money, this is an investment that's done very, very well. We've had it in Asia Stock Alert for only about 4 months, and we're up 7% on it. And so for a money market fund, that's a fantastic place to park your money.
Okay, Tony Sagami, thank you, sir. Yeah. Of course, the commodities markets, including precious metals, affect and are affected by currencies. And joining us to discuss that relationship is Brian Rich, the currency specialist for Weiss Research and the editor of the World Currency Alert. Brian, it's always so good to see you out here on the set.
Good to see you.
All right, let's talk a little bit about this recent trend that we've been seeing by central banks, including the Federal Reserve, to basically go out and print money. Right. What role has that strategy played in this precious metals rally?
Right, well, it's played a big role. Over the past 3 weeks, really the rally in gold and the rally in all hard assets against paper currencies have been driven by the prospects of more quantitative easing, not just from the Fed, but global central banks.
Is that trend going to continue?
I think it will. You know, I think what's clear is that in the assumption that this is going to happen QE2, we can look at QE1 as a failure. It didn't work. It didn't create demand. It didn't create inflation. So this is more of a desperate attempt by central banks to throw everything they have to try to create a recovery.
Okay,
which
central
is-
banks, they were net buyers of gold over the past year rather than net sellers. That's, I guess, for the first time in about 20 years or so. What do you think the significance is of that particular trend?
Well, I think the important thing is they're no longer selling gold, and it has everything to do with the uncertainty about the global economy, the rising threat of protectionism, sovereign debt problems, and the growing divisions among countries. We look back at last year; it was all about global unity coming together, coordinating policies. A lot of that is breaking down right now, and I think central banks they want to own gold.
Okay, what's your outlook for currencies in the commodity-producing countries such as maybe the Australian dollar?
Right, Australia is doing quite well right now. The dollar is the Australian dollar. It's in an interest rate hiking cycle. It's a commodity-rich country. Commodities are doing well. That bodes well for the economy, bodes well for the currency, and it's a big gold producer. So that gives it an extra little kick as well. I would say, though, that if you think commodities are going higher, it's a good place to be. But I think ultimately what we're seeing here in this other phase of quantitative easing is an admission by central banks that the economy is not getting better. In fact, it's going to be a long road to recovery. There are going to be a lot of bumps, a lot of shocks, a lot of risks to the economy. And I think that poses a lot of risk to a currency like the Australian dollar. So if you're long that currency, I think you want to be managing your risk there very carefully.
Okay, of course, another one of the world's biggest gold producers is the United States. How does that fact play into your outlook for the U.S. dollar?
Yeah, not so much. It doesn't have that kind of influence on the dollar. In fact, the typical relationship is inversely with the dollar. With gold going higher, the dollar typically goes lower historically. And that's happened in recent weeks with the announcement by the Fed and all of the talk about quantitative easing again. But I expect the relationship that we saw in 2008 to actually return, and I think we'll see the dollar and the gold back in a direct correlation moving together, and I think the direction will be higher as people start to digest the threats to the global economy and start to seek safe havens like the dollar and gold.
Okay, Brian Rich, thank you, sir.
Thank you.
Okay, coming up next, we'll hear specific recommendations for playing the rally from all the Weiss research editors, including Brian, Tony, and Sean. Jen Amos will join us for that as well. And stay tuned for a roundtable discussion about the prospects for gold and other precious metals. As always, if you have any questions or comments, feel free to email us at weissmoneynetwork@weissinc.com. We may not be able to respond to all of your emails or address them on air, but we are keeping them all on hand for future episodes, and we appreciate your feedback. Money and Markets will be back in a moment.